Good morning. This is Peter Affronti with Allendale's Morning Wake Up Call for Friday, October 20th. As of right now, we do have the corn market up a quarter cent to 5.05 and a quarter. November beans are down 4.5 to 13.11, and December wheat is up 4 cents to 5.98. So yesterday, obviously a very exciting day here. We did have the corn overnight followed yesterday's buying, which is expected given the size of the buying seen yesterday. Yesterday's volume was large, which was a surprise given how low the volume has been over the last 3 weeks. What we did see was signs of active fund short covering, in which funds could be fairly close to flat right now in corn when they had been short over 160,000. While the buying was heavy, it was tough to determine what all this pre-buying was over. Was it over the CIF levels basis? Was it over slightly poor exports? What are we looking at here? Do we see down the road that we could get some new exports? We'll find out here soon enough. Snow is in the forecast for next week over Montana, North Dakota, and parts of western South Dakota. The top end totals are at 30 inches for North Dakota, something we need to be watchful for. But yes, this could all dissipate here going into the week of. Next resistance in corn is 507.5, which was hit on the overnight. We actually made a high of 508. We still expect that 508 level today to be some resistance. We will see if we can take it out. As everyone knows, there is a gap in this December corn from 524.5 to 525.5. So that might be the target that this corn market is looking at here. Moving on to beans. Beans looked like yesterday to be a follower of corn. And after we came in with export sales, the trade was looking for more of somewhere around 2 million. It was a good sale yesterday of over 1.3 million, but they were looking for something a little bit more. So we did see the market pull back here. Also, there has been talk that we should be getting some ADM sales here with China coming in and buying some cargoes. We will see. So with November still over 1310, trade is still pricing in expectations of these quote unquote Chinese buying. We'll see if it does happen there. Right now, it's best to buy beans from the U.S. for fast shipping, but if they can wait, then South American beans are much lower cost than the U.S. Trade has assumed that China needs to buy now, thus the recent rally in expectations of sales. That being said, where are the massive sales coming through here for these beans? Something we need to watch for. Wheat. Exports were actually pretty strong yesterday at 663,000. And what we did see here was, looks like the funds did do some short covering in the wheat also. You can actually look at a chart, and I believe right at 11:15 yesterday, you could see both corn and the wheat actually start moving in the same direction with the same veracity. And it just picked up going into the end of the close. But unlike the beans and corn, the buying of wheat can be more directly tied to recent news, because 4 of the last 7 weeks, we have seen an improvement in weekly sales, which is something that was unheard of just a few weeks back. So funds were short 104,000 contracts of wheat as of last week. So we do have the commitment of traders coming out here today. We will see how they did handle it. Remember, that's from Tuesday to Tuesday. So Tuesday of last week to Tuesday before. So what this will do is it'll give us an indication of what the funds are doing. We might not know exactly until next week when that commitment of traders comes out. But yeah, there was that short covering there. We will see how this works out today for the wheat. Finally, cattle. We have 4 weeks in a row of lower cash feeders, and that has sparked some big concern in futures trades. So yesterday's box beef choices up 26, select was down 18. That packer break evens 184.66. So feeder futures have gone through a drastic change of opinion lately. 4 weeks ago, we could see this going to the moon. It was like we were invincible and not looking for any type of setback anytime soon. Now we're seeing 4 weeks of lower cash causing some panic selling. Fat cattle cash was up $1 in Nebraska and $1 to $2 in Kansas and Texas yesterday. So something we need to watch there. And you've seen these fats actually pull back pretty decently too, right in line with the feeders. So right now the box beef does remain as a very good influence, but over the past 3-4 weeks, it has been very choppy and mostly sideways. So watch this recent feeder move. It may be a heads up for fat cattle and might be worth locking in some hedges here. So we could pull back even more than we have already. So call in 1-800-2-MARKETS to your broker if you do need to look at actually hedging some of these fats or even feeders. So if you have any questions whatsoever, once again, call into 1-800-2-MARKETS or me directly, Peter Ferranti, at 815-578-6157. Otherwise, have a wonderful weekend. And this is Peter Ferranti for Allendale's Morning Wake Up Call. Thank you.